Accounting 101. Accounting is the language of business. Number one, what is accounting? It's the measurement, processing, and communication of financial and non-financial information. So this is basically how businesses communicate with each other. So when you go to apply for a loan, the accounting of your business is going to show the strength or weaknesses of your business. Accounting is basically the money coming in, how it's managed, how it's expensed, how it's used, what it's used for. Accounting is one of the most important aspects of running a successful company. You're going to need to know the basic accounting terms. You don't need to be a certified accountant. If you can afford one, I would just hire one, but you still should understand, how accounting works and what it's used for, just so you can understand how to analyze and run your business effectively. Number two, understanding financial statements is a crucial part of building a successful company. Why? Because your financial statements are your reports that are going to tell you, depending which ones you look up, that's what you're going to use to help either grow your business or cut back on certain expenses or figure out whatever you're going to have to do to make sure that your company is profiting. Also, these financial statements are what is used to communicate, with other businesses. So when you go to a bank and you apply for a loan, they're going to ask to see a profit and loss statement. They're going to ask to see a balance sheet. Why? Because this is how they can understand and figure out whether or not you're a high risk or a low risk when it comes to lending you money. There are three main financial statements that are commonly used in business. Number one being the profit and loss statement, also known as the income statement. The profit and loss statement is basically going to show you how much money the business is making and how much it's expecting. So if you look at a P&L statement, at the top it'll show the revenue, the total gross revenue, and then it'll show under it all the expenses the company has made, so where that money was spent. So it'll show the income sources, it'll show the expenses, so payroll, fuel expenses, auto expenses, purchases, all that stuff goes on a profit and loss statement. And the profit and loss is for a given period of time. So it'll be you'll have to show a profit and loss for the year of 2021. It'll be from January 1st to December. You can show a profit and loss from, each quarter. So if you guys don't know, businesses operate in quarters. So every year is broken into 4 quarters. You have the first quarter, second quarter, third quarter, which is January, February, March, April, May, June, July, August, September, October, November, December. Each 3 months is 1 quarter. So when you pull up a profit and loss, know that it's just showing you how much money the company's made over a period of time and where that money was spent and how much was expensed. A balance sheet is more of a health check. Think of this as when you go to the doctor and you get a checkup, that's where your balance sheet is. A balance sheet shows the overall health of your business. So it shows all your assets, which are things that the company owns that are of value, and all of your liabilities. So that's any loans that you have, any debt, like credit card debt or anything like that, at a specific period of time. So if you pull up a balance sheet for today, as of today, this is how much the company owns and has in assets, and this is how much the company owes in terms of liabilities. Lastly, it's the statement of cash flow. So statement of cash flow is basically a report showing how much money is coming in and how much money is going out, on an average basis. So it basically lets you know how much money the company has to operate, to use for, general operating expenses. Yeah, pretty much these are the only 3 statements you'll probably use through the majority of your business career. Obviously, you can go into more detail, but these are the most important ones that you need to know, especially when you're starting out. And number 3, basic accounting terms. These are just some terms that are probably the most commonly used when you're talking about money and business. So you have accounts receivable, which is basically money you got coming in. Doesn't mean that you got paid that money. So when you send an invoice for a job that you just finished, because if you don't know, when you operate on a commercial level, it's not like you finish the job and the customer pays you. No, when you finish the job, you usually have a contract in place, right? So usually when you finish the job, you send an invoice, and then usually the terms are net 30, which net 30 means that you're going to pay within 30 days of receiving the invoice. When you send an invoice, that automatically becomes an accounts receivable because it's money that people owe you. Accounts payable is money that you owe other people. So that can be any bills you have, any invoices that you have to pay for subcontractors that you hired or whatever. Accounts payable is money that you owe. And then a bill is basically money that you owe, but it's for a specific item. So you can get a bill for material. A bill is kind of like an invoice in the sense where you don't have to pay it immediately upon receiving it. It's something that you're gonna owe depending on what terms you have with the vendor or supplier or whatever. An expense, however, is an immediate transaction. So if I go right now to Office Depot and I buy some markers, or I buy a highlighter, or I buy a printer, that's an expense because it's an immediate transaction. It's already been paid. It's not owed. It's not going to get paid later. It's paid on the spot. So when you hear about like companies or businesses saying that, oh, that's an expense, because you can write off expenses when you do your taxes. And so you don't have to pay taxes on things that you write off, as long as they're for business purposes. Bills and expenses are somewhat similar in the sense that it's money that you owe, but an expense is an immediate transaction and a bill is something that you're gonna have to pay within 30 days, 60 days, or whatever. An invoice is basically a paper that says, it usually has your company name, your logo, it has the service that you provided and the amount that the customer owes you, and also the terms in which you've agreed to get paid. So if it's net 30, that means the customer agreed to pay you within 30 days of receiving that invoice. An invoice is just a document that's saying, hey, this company did this work for this amount and it's due within 30 days of receipt or whatever. And reconcile or reconciling is basically just making two accounts the same. So for example, you have your regular checking account in your bank and then you have a credit card. Usually that credit card is gonna show up, like when you pay your credit card, it's gonna show up on your bank account. So when you go to do your taxes or whatever, the IRS is gonna say, okay, you paid $15,000 to Chase Bank. What was that for? And you're gonna have to reconcile those $15,000. And basically what that means is you have to show where those $15,000 were spent. You can't just say, oh, that's the credit card expense. No, you have to break down. You don't necessarily have to break it down because it's already broken down on your credit card statement. But either way, whatever software you're using, you can't just say, oh, this 15,000 went here. You're gonna have to, if you ever get audited by the IRS, they're going to ask you, okay, I see you spent 15,000 paying your Chase credit card. What was that 15,000 used for? That's what reconciling is. It's matching transactions between two different accounts. Accounting is an extremely complex thing to understand, especially if you're just getting started in business. But my purpose with this video is just to give you an overall review of what to expect in your career, and so that you have a better understanding of these financial statements and terms when you come across them, because you will come across them. And if you've never done business before and you don't even know what I'm talking about here, hopefully after watching this video, you have a better understanding and you're not completely caught off guard when you're going to apply for a loan and they ask you to show them a P&L, or they ask you to show them a balance sheet, and so on and so forth. So hope you enjoyed this video.